We've got a whole list of things. I'd first love to get your sort of quick analysis, quick take on Q3 earnings.
Definitely. So, at a high level, Tesla finally has figured out how to make money. I mean, that's the biggest takeaway from the earnings. We saw this is the fourth quarter out of five past quarters of really strong positive cash flow, meaning there's more cash in the bank than we started the quarter with at the end of the quarter because the business is doing well. And so I think, Tesla's on the cusp of continuing to grow with Model Y and Model 3 in China. And we're already seeing before them or before those new cars come online, they're already profitable. So I think that's really encouraging. And frankly, this is what a lot of the skeptics and bears were complaining about Tesla. It's like, okay, the product's great. The market share is great. We saw that data ahead of time. And now we're seeing that they're able to build those cars profitably as well. And then from taking a step back, the overall financial health of the company with $5 billion in cash or $5.3 billion, and they're adding a little bit of cash. They have a huge cushion. They can invest in new stuff. So I think it was, just continued execution. Tesla seems like they're really growing up as a company. And so I was really, really proud about this quarter.
Yeah, that's my take as well. Although I haven't done a deep dive into it yet, it appears like they're maturing in terms of costs and expenditures as well. They're getting more efficient with how they're spending their money. They're doing more with less, and they're making that dollar stretch. Would you concur?
Yeah, and I think part of the reason why Wall Street was so baffled and the results went up is because Tesla has been saying they're going to do this and they're going to improve their manufacturing and they're getting better and better each quarter. But last quarter, we didn't see it because there was less regulatory credits. And this quarter, we are really seeing it. But it's just that constant piece of innovation at the manufacturing level. Tesla's constantly working on automating this, making this better, making this more efficient. And that laser focus on cost cutting is really coming through on the bottom line. And we're able to see them not only the ASPs, the average selling price, the Model 3 is normalized from that 60 grand performance all-wheel drive. Now the average price is around 50,000, kind of normalized, stabilized, and they're able to do it profitably. And so that was a huge, huge question, and we've seen them validate that.
I know one of the criticisms that I've seen online, and I haven't really given it a whole lot of thought, but they say that the year-over-year production numbers or delivery numbers are down. What say you about that?
Yeah, so the delivery numbers were up slightly, but I know the revenue was down year over year a little bit by about 8%. And Tesla's always a rapid growth company, and us bulls are saying, okay, well, that's why they're not profitable yet, or that's why you give them the benefit of the doubt. They're growing rapidly. And they still are growing rapidly overall. It's just this quarter was a very unique, weird comparison where they deliver all of those $65,000 performance Model 3s in the US, which had a much higher average selling price. So it was sort of like an inflated quarter with all this demand. So it just made for a really tough, what's called comp or year over year comparison. But Tesla's business is kind of lumpy like that. And they haven't, in the past year, they haven't really expanded production capacity. They've just gotten really good at, making sure they're producing it the most efficiently. And that's why we've seen them be able to do it profitably. And now what's coming in the next year is we're going to see capacity expansion with China and with Model Y. And as that comes online, we're going to see that top line start to grow and accelerate once again.
How do you think Q4 will end up, in your opinion? What's your consensus?
Q4 is going to be about 105,000 deliveries if you assume that they say they're going to hit the low end of that 360,000 guidance. And I think, you assume a little bit of more of economies of scale, continued improvements. So I think the US sort of main piece of Tesla is going to be crushing it. Then China's kind of a question mark because how many cars they deliver, the gross margin on those cars, the profitability of those initial cars going off the line is going to be very low. So that could be a little bit of a drag on the numbers, but it's going to be a very small piece. So personally looking a little bit out to Tesla, I don't like to dive, quarter to quarter. I like to think a little bit more longer term, but we've been hearing some really interesting hints about Elon Musk several times referencing like Q2 2020 or Q3, sort of late 2020 as a really strong period for Tesla when all of these sort of tailwinds kind of merge. So I think results are going to be strong until then, but maybe they could be choppy quarter to quarter.